All right. So let's take a look at medium probability trades. Now, I would say that probably about, I don't know, let's say like 70 to 80% of your trades over the course of like a year, over the long run, are hopefully going to fall in the medium probability category. Now, you might be thinking, well, why do we want 80% of our trades to be medium? Why don't we just make the majority of our trades be high probability? That's a fair point, but for a trade to be high probability, which we'll get into in the following lessons, for me, that's kind of where there's like almost no negative confluence against your trade. So obviously for that to occur, it's not going to happen that often, even over the course of a year. It's going to be quite rare. So if you're only waiting for those trades, you're going to be sitting on your hands a lot of the time, and it's just unnecessary. You don't need to wait for just those, okay? So the bulk of my trades really are kind of, at least in my mind, the way I categorize it, they're going to fall into here. So using, again, the medium time frame phases cheat sheet as sort of our mechanical way to try and categorize these trades. It's not a perfect solution because every scenario in the live market is going to be different. Like, what's the higher time frame doing? Where are we in the leg? There's so many variables, right? But this is our way of trying to kind of categorize it and simplify a bit. So let's kind of go through this slowly one by one, and then we'll look at a few real examples. So medium probability, kind of these phases. So let's talk about phase A and C first, because really those are my two favorite phases out of all of them. Like, I would even probably be happy just trading, these two. So let's just think about phase A first. As I've said before, the best time, in theory, to trade phase A is here. So phase A is pro swing and pro internal on your medium time frame. Okay, we always apply the phases just to your medium time frame. So for me, that's the M15. So phase A, the best time to do that is where basically we've mitigated the very, very extreme. So this is the level that needs to hold if our medium time frame swing trend is going to be respected and if it's going to continue. And then we have waited for the internal structure to shift bullish. So now we have everything aligned. Our medium time frame swing and internal are both bullish, and we're looking for longs. The reason why the start of that move, right after the initial IBOS, after that extreme mitigation, the start of this is the highest probability, is because really risk to reward is on our side. That's usually when the best kind of moves happen. Because technically, if we follow the internal structure, right, we get another few phases up, like here, and then we pulled in again here, they're both phase A. But where are we now? We're getting near the high. So it's not to say we should never take these trades, they're not worth taking, but it's just, in theory, they're a bit lower probability than buying down here because we're getting higher in the leg. We might get a little bit of a move, but it sweeps the high and then we take a loss or a break even, or we just start to range a little bit before we go, right? So ideally, my favorite move for phase A is that initial IBOS after mitigating the extreme, or at least a significant level, pull back in. On paper, that's kind of the area I want to get in. Okay, that would be like really high probability. So why have I said it's medium probability? Well, it can be a phase A trade, but it's like I said, maybe we're buying near the high. Maybe there is some somewhat significant supply here to the left where we probably are expecting a bit of a deeper pullback from potentially before we go. So it's not ideal really to be buying right after a mitigation of that level. So poor risk reward essentially, or like, yes, we are pro medium time frame internal and pro medium time frame swing, but maybe we're trading against the higher time frame overall momentum, right? So maybe we've come off like a 4-hour level and we're expecting the next 4-hour leg to the downside. And technically our medium time frame is still bullish, but at any moment the 4-hour could take over. So it's kind of like, it's medium probability, right? So that's why, a lot of the times it will still fall under here rather than completely high where we have like everything aligned. So then the exact same thing for phase C. That's my next, favorite phase, if not my favorite phase, where basically it's where we have we've had the medium time frame boss. So at some point we're expecting that big swing pullback to kick in. We've mitigated a significant level. Ideally, we've had like that strong liquidation into that level. And obviously we need to have had that bearish IBOS so that if we are shorting, we are pro the internal structure, right? Because phase C is against the swing, but it's pro internal. So when we get that initial mitigation, the liquidation, and that initial IBOS, for me, I love trading this a lot of times because you're shorting from this strong internal high and it's the start potentially of that swing pullback, right? That's the key. It's that first initial phase. So risk reward is on your side to play that leg, right? I'm not swinging for the fences and trying to target down here. Generally, I'm literally targeting that next low. But this is my favorite time to do phase C. So that's when it's pretty high probability. But again, the majority of the times it's going to fall under the medium category because maybe again you're trading against the 4 hour being heavily bullish, like your higher time frame. Maybe the risk reward isn't that great. Like there might be like a significant demand zone here. Maybe a lot of times you might not catch the initial phase C up here, and you might be trading phase C here or even here, right? It's getting more and more low probability the lower you are shorting in the swing range, right? Below shorting in the discount, you're shorting into this demand. At any point, the swing pullback can end and the internal structure can shift bullish. So these are kind of more the medium probability phase C trades, right? It's kind of when risk rewards on your side and or like the higher time frames are really heavily bullish or whatever. Like I'm not going to list every single factor here that makes a medium probability. It essentially just comes down to it's a decent trade. There's a lot, you should take it because there's a lot of positive confluence, but there is also like, a decent amount of negative confluence as well. That's essentially just what makes, in my opinion, a medium probability trade. So that's phases A and C. They're my main phases that I love and the main ones that I think about. So A2 we've spoken about, right? It's when we are pro swing and pro internal, but after the boss. So we know it's not ideal because at any moment that pullback can kick in. So risk reward is not on our side. But kind of the times in which it can be worth doing is when there's no opposing key level. So if we look left, it's usually when there's just literally like nothing nearby or like, there's no supply and demand. There's no like key liquidity points that we're going to like see price take in reverse. It's when you almost can just see there's like, plenty of room for price to go. And when it's the start of like a higher time frame move. So I'll show you some real examples because it'll be way easier to visualize with a real example. But essentially like, let me see if I can try and think to draw this. So like a start of a higher time frame move would be like, imagine this black line is the 4 hour chart and imagine we've had the 4 hour swing pullback all the way up into a 4 hour, where's the 4 hour? A 4 hour extreme supply zone, right? So we know that like this is, let's say the 4 hour swing high. This is the extreme supply. So we know if that 4 hour bearish trend is going to continue, this is a very high probable level in which we're expecting now a big move to kick in. And then imagine like your M15, I'm just going to draw it with red to speed this up, but imagine like the M15 swing structure has shifted bearish. So we get the M15 bearish boss here, confirming this 4 hour level is holding. And then we've just had the M15 boss, the internal structure is still bearish. So basically we're following this, right? This is like our A2 down here. So again, we've mitigated 4 hour supply. The M15 is our red price action here, right? We've shifted bearish. So the swing's bearish, the internal's still bearish. So we're in phase A2, right after the boss. And basically we look left, there's like no demand, there's nothing in the way. It's the start of the momentum, the start of potentially this big 4 hour move. This is when I would say following phase A2 for like quick little moves in here can be like medium, to high probable. I struggle to call it high probable just because at any moment that pullback can kick in, but it's pretty decent. So that's the time in which I'll consider A2. But again, that doesn't happen that often. Okay, but I'll show you examples later on of kind of when I consider that. And the final one is phase B. And I kind of, in my mind, phase B will never really go into the category of high probability because you are trading counter internal. So it is good that we're pro swing, but I don't love trading counter internal because the internal structure is like, it's more of the immediate price action. It's the immediate really order flow. It's the immediate direction of the session. And if you're trading against it, in my opinion, that's never really going to be as high probability as it could be, right? I like trading pro internal the majority of the time. So this is the time I say in which it's best to trade phase B, which is literally when we come into the area, pretty much the extreme, when we are expecting the internal structure to reverse. That is when it's best to trade phase B. Because again, I've said this before, but we'll go over it. Phase B is here, getting long here, getting long here, and getting long here, because all of those are pro swing counter internal. Like doing it up here is not going to be high probability, right? So all of these can fit under medium probability, really medium to low. You guys can hopefully figure that out on a case-by-case basis. But that's why for me, phase B pretty much is always going to be medium to low probability, right? And we want to be doing it down here, not all the way up here, right? Obviously, like these are the two ways in which we can make it better for us, as high probable as possible, is we want to do it well priced. So ideally, at least in a discount of a buying, like I said, near the extreme. And pro-fractal order flow is another thing you want to consider. And essentially what I mean by that is just waiting for like an M15 chock or a medium time frame chock, right? So price comes in, yes, we're buying, which is counter the internal, but like maybe we don't want to get in long straight away on a lower time frame. And at a minimum, we just want to wait for that M15 chock first. Okay. And then ideally we can get in here and at least play that pullback into here or potentially higher, right? So just one other thing you may want to consider on how we can try to make phase B a little bit better. So really, that's kind of how I can categorize what the majority of my trades are going to be for medium probability. And then what makes them high probability is when you have almost like the perfect trade. There's almost nothing really against it. There will always be some negative confidence, of course, but yeah, we'll get into that at a later date. So that's the theory out of the way. Let's dive into a few examples and try and make it all make sense.